The Bulls versus the Bears. Get in the game. www.tackletrading.com.
Hello everybody, this is Coach D with TackleTrading.com here to give you a market update and recap. I want to take a real quick look at, we'll start out here with the S&P index here and get a good look at, boy, just getting crushed. Today, yesterday we had that big drop, and then today that what they've perceived as a rally, but it gave up those gains by the end of the day. And in very, very early after hours tradings, we're continuing to trickle down. So real heavy volume. I mean, 2, 3, 4 times the average there. Just awesome volume, huge volume. Giving up all the gains for the last calendar year, all the way back to October. We've come down and seen those lows. Biggest technical levels I'm spotting are around 1800, previous support zones, and big general trend zones that we'd spot in there, and I'll kind of go into that here in a moment. Let me just say, boom, S&P, E-mini futures here, just big, heavy selling. The gains today, if we zoom in here, you can see we have let me zoom in this way. We have that candlestick there is kind of a high wave doji, and then closed right where it opened, so it just gave up those gains across the board. And then let's go ahead and drop it out to a weekly time frame. On the weekly time frame, you can see that slowing momentum. You can just see it. You can see the double top, almost a triple top, M for murder, break of support. And if you missed this, if you didn't get short exit bullish positions, that's simply because you were not paying attention and or simply were not educated enough to know that that double top and that general setup in here, that whole setup in here was a big warning sign. Double tops, anytime we see a failure of support, we can't be too surprised. Now what I see here that's really startling is just the size of the drop. Compared to previous market tops, this is the fastest I've seen an initial sell-off hit. So pretty heavy, relatively impressive. I'm watching 1800-ish for the first real known technical support zone. Let me drop you out to the big monthly time frame. And from the big monthly time frame, just big strong run up. First big move down, boom. 23.6% Fibonacci retracement. If we were to go measure up, let's do a little Fibonacci action for you just for fun. This is just a way to measure. So we'll go down to that previous low, measure it up to the all-time high, and 23.6 is going to ballpark in around that 1800. Now again, it's a ballpark. It's not exact. It's just ballparking in there. So you see that 23.6 there. And if you were to go measure off of one of these other waves, say the starting point here, what I typically look for is what I call a Fibonacci confluence. I don't have a very good confluence off of that one here. We can go off of the start point there, boom, and there's our confluence. So you'll notice that the Fibonacci's overlap perfectly around 1800-ish, call it 1790, 1780 ballpark, 1800 ballpark. So in that ballpark, percent retracement is going to be something to watch out for. That's kind of where I expect to see the first support zone come in there. And I have no idea how big the rally will be through here. May be the type of thing that takes some time, but typically after the initial drop, here's an example of previous 2007 meltdown. That first little drop rallied really quickly, a couple months there. So boom. Again, started to hit in August. So February. Let's see, you got December, January of 08, boom. Retrace, kiss goodbye. So we'll keep an eye out for that. Now into an intraday time frame, checking this out down here in around 15, let's go 30-minute time frame, clean that up a bit. You can see from that top, just the general drop, boom, we're seeing it slow down, boom, and now it's kind of come down, broken through that initial support zone, and you could be looking at it reversing here, either inverted head and shoulders or retesting and giving us another bearish retracement setup to the downside. I'm expecting some more trickle down just based off of what I'm seeing here. So that's the big picture S&P E-mini futures. Let me drag it out here and look at the ETFs for all of the major market indices. So again, here I've got some Heikin-Ashi candlesticks on there showing some pretty heavy downside movement, and Heikin-Ashi candlesticks really don't change colors until you see a change in direction, a pivot. So it kind of takes away some of the over-emotional part of seeing like the first green candle. Boom, same thing here. Dow Jones Industrial Average just getting crushed. Really testing that first support zone. That's the diamonds. NASDAQ, QQQQ coming down, hitting and testing that known support zone, rallying up out of it. Kind of giving us that same bear retrace. Same thing here on the Russell 2000, big drop down. Kind of giving us a bear retracement off of that initial. If we were to drop down, you'll see that. Here is the dollar index, the UUP, Exchange Traded Fund. Dollar is testing a big support zone on the UUP ETF. Just to compare and contrast, let's look at the DX. And you can see again testing a known key support zone. Let's take a look at the GCC, the Greenhaven Commodity Index. Just crushed, big drop, boom, inside candle. If anything, I'd expect continued down. Worst case scenario, maybe a retracement. But I'm very, very short commodities in general. Let's grab the 9 sectors spiders. Kind of run through those. The S&P Spyder Sector ETF that we can use to just track overall performance. XLB. Let's go take a look at that. XLB, boom, lower low, lower high, breaking key support, a lot of momentum down. Very, very bearish on basic materials. Any rally here would be bearish retracement. Energy, very, very bearish. Broke key support zone, shorting everything in energy. Looking for any sort of rally in here to be a bearish retracement, but I expect it to continue to trickle down right now. Financials, and one of the strongest prior to the meltdown, broke first support zone, broke second support zone, come down, retest third support zone, inside candlestick, expect it to give that up and retest lows. XLI Industrials, boom, broke key support, lower lows and lower highs, big increase in downward momentum, big support zone. Any rally here, I expect that to come down, retest, and break through. XLK Technology Sector came down into known support zone, inside candle. Could be, well, look how long that lower shadow is way down there, came way down hard, boom. This is bear retrace. Anything higher than this is going to get into, kiss goodbye zones. Looking for it to drop back down. XLP Consumer Staples broke key support zones. One of the stronger performers. If we're looking at that, big support zone, resistance zone, I expect this to, again, probably see some continued trickling down. XLU Utilities put in a nice reversal prior to this, popped, retraced, came down hard. Utilities is probably the one area I might consider cautiously bullish on. It came down a little lower. It's retesting lows. It's going to have to find some buyers in there, and even then, it's something I'd be very, very cautious on. It's XLV, which is our healthcare sector, relatively strong prior to, big drop, boom, came down, hard, retested previous lows, and again, inside recovery. I'd expect that to give those gains up, just like the rest. And same thing here with the consumer discretionary spending. So boom, big drop, rallying in. I expect all of these to turn into bear retracement type moves intraday. Expect them to continue on down. So be cautiously, be bearish, be cautious, use tight stop losses, use appropriate risk management. And for the most part, just cautious bearish postures. If we see things like maybe the Feds take action, we might see the market rally quicker. As far as we can tell, overall, markets have been kind of beat up here. Let's take a look at the economic, let's look at the trade center here. Market carpet for last week, just red, 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 red across the board. Let's go look at our economic calendar here. Keep an eye on that. This week we've got some durable goods orders coming out at 8:30. Thursday we got some GDP and jobless claims. And then Friday we got some personal income outlays, big events. Those could be the type of thing that either add to or take away from this downward move. If we got a good GDP report, that could lead to recovery. If we got a less than spectacular GDP report, that could cause additional chaos and downward move. So this is Coach D, tackletrading.com. Again, you'll notice here that one of the things that we have really instilled here at Tackle Trading is that the market move down is nothing to fear. It's just to be understood. In fact, it's quite empowering. If a great deal of our students and a great deal of members of Tackle Trading have had a phenomenal week, where Black Monday was not Black Monday at all. It was Golden Monday because they just crushed it. Phenomenal returns on investment. And we want that to be you, and that's why we're here. So CoachTTackleTrading.com. We'll see you guys in the clubhouse.
Isn't it time you got off the sidelines and tackled trading? Join our online community of active traders where we make it happen every day. Stocks, options, futures, and Forex at www.tackletrading.com. Get in the game.